and welcome to ATFX's CPI preview, probably the premium event of the week. Please do click on follow us on our social media channels, and we'll get you all the market updates as quickly as possible. So today's Tuesday here in the markets. Big day coming up tomorrow with key US data, the CPI data. Coming out, and given the volatility we've seen in markets, US markets and across global markets, this is a very big data print that we're waiting for tomorrow. The expectations for Fed rate cuts have changed dramatically. At the moment, like we were fully expecting to see a rate cut in September, we were expecting to see 25 basis points. Now, 50-50, very evenly split on whether we get 50 basis points or 25, and that is going to move markets. So what we'll be doing in a short while is just looking at some of the key major charts as well and seeing what potential moves that we can see if there is a significant deviation from that expectation from CPI prints. So once again, just to look at where we are, we're actually still 36 days away from the next Fed meeting and that key September Fed rate decision. As I said, it is very evenly split at the moment between 25 and 50 basis points, but we've got a lot of trading sessions ahead of us before we hit that time. So it's going to be interesting to see where we go. And there's plenty of volatility probably going to hit the markets in that time. Due to what we've seen, we have not seen the traditional Northern Hemisphere summer doldrums that we usually expect during the end of July and the start of August. It's been a roller coaster ride for markets, as most people out there will know. The month-on-month headline CPI is expected to show a 0.2% month-on-month increase, which is in line with what we've been expected, slowing inflation in the States, and that's what's leading to these rate cuts from the Fed. The core CPI number, which is probably more relevant, let's be honest, also a 0.2% increase, so it makes it nice and easy for us trying to trade the event live. And the year-on-year number in at 3%. Now, obviously still well away from the Fed's target, but definitely coming into line with what they were looking for. A downside print on any of those numbers, and they probably will come in line with each other, should see gold probably take out this recent high, take out trend line resistance, and move into fresh ranges. And obviously, we've got no target above. You'd then probably be looking at a Fibonacci projection of these big moves and seeing where the next 50%, 31.2, and 61.8% moves are, then you're going to be looking for those big numbers. So obviously, first big number you're looking is 2,500. If we get a lower print. Now, if we get a higher print, and that's going to certainly pull away from that 50 basis point rate cut, then we're probably going to see us move back into ranges and then target this sort of trend line that's coming up here around. It's probably going to be around about 2,400 once we hit tomorrow's CPI. So these are big moves. Like this could be a big move. So I think this is why we've started on gold. A weaker print locks in that 50% basis point. We'll probably see the percentage go up to sort of 70, 80% that we will get that 50 basis point rate cut. That's probably going to take gold into fresh highs. We're going to target 2,500, and then we're going to probably start to target moves up here to sort of 26, 2,700 relatively quickly if there is a big disparity and deviation from the expectation. I'll move over to everyone's favorite currency at the moment, the yen, which has been flying around, as everyone in the market will know. There will be moves in the crosses, but really this dollar yen is paramount, and this could see some really big fly moves. We've probably got the risk to the downside again. That is the current recent trend since we had that rate hike from the BOJ, and we're looking at faster and harder rate cuts from the Fed. A lower number will take us down. It will and I know it's a long way, but it's moving percentages on a daily basis. Like its average range is massive relative to every other currency. The initial target's going to be this sort of trend line support down here. Look, we're looking about 142 to figure. The recent low on the crash, I suppose we could call it, 140, 161. A target from there breaks down, and then we're looking for these mid 130s, and then it's a big break, isn't it, down to sort of levels that we haven't seen for a long time. Now, that would be, I think, to extend those moves, we'd probably have to see a real disappointment. So CPI, the month-on-month numbers into the negative, and the year-on-year, like well down into the mid-twos. We're talking about the dramatic moves here. A stronger print, then probably sees a bit more of a relief rally, which we've seen recently. We're seeing at 147, just under 147.50. As I said, there's been great moves here that we could probably see. We would probably see 150. When we're looking at other currencies, and I'll skip over to euro and cable in a minute, we're looking at 50, 60 point immediate moves. With dollar yen, we're looking at 100, 150. That's just the nature of the beast at the moment. And this is where the trading opportunities come. So I'll just switch over to have a look at the euro chart as well. Obviously, the biggest traded currency pair in the world. It's been relatively range bound for the last, really for the last couple of weeks. And this is a key data point ahead. I should mention the other data points that will affect these Feds. So PCE comes out. That's the 30th of August. We've got non-farm payrolls, or the next non-farm payrolls. That's the 6th of September. We have another CPI print on the 11th of September before that FOMC meeting on the 19th. The FOMC meeting conclusion on the 19th of September. So plenty of water to go under the bridge, but this could be the first nail in the coffin, and it could really start things moving. So euro, great trading opportunity. We're seeing this range constricted. A weaker print, and I think, we're kind of looking for this weaker print. Investors want to see the weaker print for stocks to gain a little bit of confidence. It will target that level. They hit like 110. Resistance coming in just below that 110. Stronger print, we're going to be down here to the 108s again, and then a potential break. And, that's probably the surprise, is the stronger print, that inflation is going to remain sticky. It's a concern for the Fed. We know that. And we've shaken off last week's major concerns that came with that big crash on Monday. But once again, we still could see further moves. Cable is very interesting for a lot of reasons this week, and it's probably the one we could see bearing a relatively benign print from the CPI data. We could see more moves. There are 4 key data prints out of the UK this week. We've got employment data tonight. We've got UK CPI, all very, very important. We've got retail sales and we've got GDP numbers. That could see cable move a lot. And if you get a combination of the two, so a weaker print in the US and a stronger data print out of the UK, it's not a foregone conclusion that we will see another rate cut from the Bank of England. We could see cable on a weaker CPI print really testing these recent highs, up near 130 for the trendline resistance, up a little bit higher at 130.50-ish for the recent highs. And then that could break up and even take out these highs we've seen, 130, 132, and take us into a new level. That would probably take decent data out of the UK and a weak print out of the CPI. So plenty going on. And obviously what we will then, this is a nice level on the downside, 126.65. You've got the 200-day moving average, plus trendline support, plus the recent low. Weaker UK data and a surprise stronger print. We're going to be in fresh territory for the cable as well. So guys, that's it. CPI, very, very important. We've still got about 24 hours to go once this video comes out, but this could be the real market mover this week. So good luck with your trading, and thanks for all from ATFX.